So, David, you talked about examining the companies you invest in. I mean, what level of so presumably you're using underlying GPs to source those companies. I mean, what level of transparency do you have to where the money is actually deployed?
Yeah, the transparency has increased a lot I've been with MLC, as I mentioned, 16 years. I think for buyout transactions, the transparency has always been very high. So you always get a full set of financial due diligence report, legal due diligence, commercial due diligence. These days, we typically also get ESG due diligence, and because everyone's so risk averse on cyber risk, we often get tech due diligence as well to see how strong the platforms and the technology is. The buyout side has always been quite good. As I mentioned, the level of due diligence has only increased over time. Where we've seen kind of the most marked changes is in kind of the venture capital world. So that used to be quite secretive. I remember when we first invested in some of the top tier US names, they wouldn't tell us what was in our book, which we thought was quite ridiculous because we're investors. But they were so hard to get access to, you kind of were lucky to get an allocation. And so you're like, thank you for us getting in. We'll kind of figure out what we're investing in later, but we're generating like 30% returns. So I guess while we keep doing that, everyone's happy. But about 10 years ago, with increasing regulatory scrutiny, both in the US with the Freedom of Information Act and then in Australia with public holdings disclosure, that became quite a strong push from all the investors to actually kind of have a lot more disclosure. And we suddenly saw access to data rooms, which ironically we never had when we first started investing in some of these venture funds. But over time, we've seen that kind of expand to what we would call a very transparent level of due diligence. So not only do they tell us all about their holdings now they have portfolio workbooks where they'll display all the financials of all the companies, where they exited at, how they're tracking. We'll get access to monthly budgets or quarterly budgets, and then reconciliations against that. And so these days, it's probably very equivalent to what you would see, if not better, than the public market books that we run at MLC.